are prepared to break the silence, I'll be out in the sunshine, running beside the lion. I've been feeling down, but I've been looking.
Hello, welcome back to WinFS Trading YouTube channel, the only channel that has been optimized to make you rich trading the forex synthetic market. In today's video, we shall discuss a complete simplified volatility 75 index trading crash course. Meaning this course is for beginners, this course is for newbies that actually want to succeed trading volatility 75 index. But if you are expert volatility 75 index but you are not making much progress, you can actually watch this video and take advantage of the content here. So we start with some basic definition of volatility 75 index. Volatility 75 index is the highest paying volatility index because it has the highest volatility on the same lot size level. So if you trade other volatility indices with the same lot size, let's say volatility 100 index, volatility 25 index, if you use the same lot size, let's say we are using one lot size, you discover that the volatility 75 will have the highest change in pip. Okay, it will have the highest change in price. Okay, it will make the highest losses or the highest profits. Okay, pip change per minute, this should be minute. Okay, pip change per minute can what? Yeah, range from 500 to 1000 plus pips. Okay, so daily pips ranges from, I didn't write it, but it's based on experience, it ranges from 30,000 pips to 50,000 pips plus there means it can go beyond. Okay, so it's a very volatile asset. Like this is typical, this is on average. Okay, this is average range. Okay, so the daily pips ranges from 30,000 pips to plus 50,000 pips. Okay, so imagine how the weekly pips and the monthly pip level will be. It will be much more bigger, but I don't want to go into that because this is just a preamble to discuss. Okay, so it moves faster and ranges less, so it actually moves faster than other volatility indices move. So it moves faster and ranges less. If it's ranging, don't expect the range to last longer. If you spotted the range in weekly time frame or monthly time frame or in some like higher time frame like daily, monthly, weekly, know that it will not take much time. It will break out into the fast movement of price, which is trend. Okay, it will start trending. So it's good to trade a trending market. So when it moves faster, it actually means that if it range, it doesn't take much time to stop the range and start moving in a high speed. Okay, it is good for growing very small account faster because it moves fast. After a small range, it moves fast, so you can use it to grow small account like $5, $10 and all of that. Minimum lot size is 0.01 and maximum lot size is 1.00. Okay, it blows account faster. Okay, if you are not trained to trade it profitably. Okay, if you are not trying to trade it profitably. So the solution to this, if you are fond of blowing your account, or you are just newbie but you don't want to be blowing your account, you have to join our Volatility 75 Millionaire Course to escape the losses. Okay, you can also join our VIP Wfx Channel To trade V75. The reason is because maybe you are tired of learning you don't want to learn, you don't have that time to learn or the energy to learn course, then you can join our VIP. In the VIP Wfx channel, we actually trade V75, forex space, good, like good servers. We trade other synthetic indices and forex space. Okay, so it depends on what is available. We scan through the forex and synthetic asset and pick one that will give us huge profit. In forex spectrum, if gold is going to pay us well, we are going to sense gold in the VIP. Then in synthetic spectrum, if V75 is going to pay well, we are going to send it. Or if V100 volatility 100 index is going to pay well, we are going to send it. If it depends on what is going to give us high reward to small risk, like high reward to small risk. That is a risk reward ratio. We need a small risk but big reward, big profit. Okay, so that will determine which asset we are going to relay in the VIP. I think at this point you can make a decision. Okay, should I buy the course? Should I join the VIP? It left for you. So let's dive into the continuation of this video. I want to show you some things about Volatility 75 index for beginners. You can see that this is Volatility 75 index chart. You can see, just look at it. This, I'm using H1 because it is more clearer to understand it on H1. Just look at this. Can you spot where this market range? You know, a range is a region on a chart where the price does not move up, like where the price does not create differential swing, rather it move horizontally between two fixed boundary. For instance, we can say that between here and here, like inside this zone, there is a ranging behavior, even though it's not too much, but there is a ranging behavior. But all the way from here down to here, there is no, like, we can assume it, we can take it as trending mode, trending period, because the market just moved down. It just moved down, creating swings, like create swing and break swing. So it moved down. Why it moved down? It is creating small range and breaking those range. So those small loop where price tend to be stationary, that are called range, you can see them. And when market break out of them, you notice the distance created is now called trend. Okay, trend. Okay, now if you look at this market, you discover that it is clear on how it behaves. Okay, from one screen level to another screen level, all the way from here it falls, right? And then all the way from here it do what? Goes up. What do you notice there? What is this shape? This is impacted view, right? Now you see what is happening here now. Okay, but I'm not saying that this is a criteria for trading this asset, but I'm just showing you how simple the movement is. Okay, the screen levels can be broken perfectly. They can decide to break this level and push this region up while taking lower prices, like prices less than $300,000. Right now the lowest price reach is what? Check the black number, is a 301,968. Okay, you can see how the market is actually trending. Like once it start creating differential swing from like far away from particular end of the screen, it has more probability to move in that direction once you can enter perfectly. Okay, take for instance, we notice that this market is moving away, from this screen end, right? And it has created a differential, like it have created a swing. This is a swing because price do what? Price return after it moves a very high level, it returns back to here and then swing to the extent that this high was broken. So this is a new entry we can buy here, because while it is moving away from the bottom of the screen, that it has high probability that it's going to go up again. Maybe even if it didn't reach the other end of the screen, it could actually reach somewhere here, okay, at the midpoint of the screen. So this is a buy signal right now. It could actually break and come back here, yeah. But with your risk management, you can just risk. What are you able to risk? That's the major thing. You can just risk 4,000 pip here, and then target what? Because if you believe it's moving up, then it will come somewhere here. You target around the 20,000 pips, okay? So what makes you a successful trader is ability to know your risk appetite. What are you able to risk? For me, if I'm entering at this area, then I think I'm going to draw my zone, extend it where my stop loss will be. So if I'm entering there, then I'm going to say, okay, it's not going to come back here. So if I enter here, I'm risking just below here about 5,000 pip, and then I'm targeting that the market will come back, will go up to over 20,000 pips. That is 1:4, over 1:4 risk reward ratio. Okay, I'm risking I'm getting 4 times what I risk. Okay, so you can see that you can easily use the V pattern of volatility 75 index to trade it. What I mean by V pattern is when you go to H1 and then look at the least level, you discover that the market is actually doing something like this and then something like this. It's not that this thing hold all the time. It cannot hold all the time. Most times they break those levels, but I think for a beginner, this is the only way I can simply explain it. Okay, yes, as a beginner, as a newbie, you notice that you can actually make some living from this behavior. Okay, when the market started moving away from the screen, it tends to continue moving in that direction. Once it is creating swing, like breaking levels, breaking swing levels, like you see it break this swing here and then it break this swing here. So the problem now is your entry criteria. Just you enter after a retest to a broken level, and then you put your stop loss maybe above previous swing. Like if you are selling here, you know that this is a sell signal. So if you are selling here, you are risking. You are selling here at this price, then you are putting your stop loss above this swing level. So you risk 6,000 to target towards the end of the scheme about over 40,000 pips. Okay, I don't want to go too much talking much about this. If you really want to learn how to become successful in this game, like avoiding the exceptions, because this is just indicator, it's not the real price action. When you go practical, when you go live, like when you are actually doing this, you discover that in the long run you will have a negative statistical edge, because those end of the screen become breakable boundaries. I'm sorry. So if you really want to change your life, you have to enroll for Volatility 75 Millionaire Course and learn from expert, or you join our VIP signal and become successful. Thank you. Bye for now.
If you're prepared to break the silence.